So this is a quick video going over NIXX, one of the top gappers this morning. So this is up for a number of reasons. They released a couple PRs yesterday about this $10 million share repurchase program, $120 million contract. They also withdrew the S-1 offering yesterday, which I believe caused the initial spike. Then also taking a look further, we see that it used to be RCRT, recruit.com. They had this $50 million, if we just look at the recent offerings, they had this $50 million convertible note deal in January. But they actually canceled that. So you see here, it's Withdrawn, it's offering a $50 million. So it's interesting that they canceled that. They withdrew the S1. But if we look at go back to the dilution tab, we see that they have $96 million that they can raise from the shelf. And then taking a further look, so they're over baby shelves. Just take a step back because their float value is over $75 million using this $6 highest closing price in the last 60 days, which actually won't be the case soon, right? Because they won't, they can reference to calculate their float value and ultimately how much they can raise. They use the highest closing price in the last 60 days, but that won't be the case as time goes on, obviously, because it's had this big decrease in price. So it would seem that they would need to use that because we just updated the cash position because we had it at $52 million with a ton of runway, but because that $50 million came from that convertible note deal, but they canceled that. So now it's actually a lot less runway. And if you look at their commentary from the last 10Q, their cash on hand is not enough to meet their working capital needs for the next 12 months. So it seems likely that they do use the shelf. So I guess to take a look at a couple other things, how did it do on previous gaps? So if we look at our research and historical charts here, this was back in October was the last gap. And they did an offering after this, but it wasn't until like 3 or 4 weeks later. But this is how it ended up prior to that. I'm not saying it's going to do the exact same thing, but it seems, at least in terms of the agenda, it seems most likely that they do an offering from the shelf near term. I couldn't really see any other way that they were going to raise capital with them withdrawing the S1 and canceling that $50 million convertible note deal.